Good morning, ladies and gentlemen. This is Greg Michalowski, and this is a New York opening Forex commentary for Thursday, May 13th for FX Street, brought to you by FXDD. Let's take a look at the market. We'll start off with the euro versus US dollar. And the key level here for me is around this 126.04 level. If you go back in time, well, first of all, today, as you can see these highs here. We've actually we broke through this 0.4 level, and then we had some highs that came in against that level. Go back in time, look at the lows here. Go back in time, look at the lows here. Look at the low here. Look at the low here. Look at the low here. All these levels are what I call make what I call a remembered line, a remembered price. That's a market price that the market does remember, and it uses as support or resistance. And right now we're using it as resistance. You can see in the last bar we went up to that 126.04 line and come down. Currently trading at 125.91. You can see a little bit closer on the 5-minute chart, although we were able to move above on a few little 5-minute bars here. Each of the time the market went above it, it came right back down, including the last time that the market went up on a 5-minute chart, went right up to the 0405 level, and then came right back down, down a little bit to 04 right there. And again, looking back in time, watch this line, watch the price, go back in time. You can see all those little times. The only time it went below that area was during this move back to the downside here, which would quickly reverse, and then another attempt right here. But all these little bars along this 5-minute chart give you that clue that that is a key price for the market, and that indeed is what the market is remembering and using it as resistance. So for today, if the price should move back above this 126.0405 area and see some momentum to the upside, we should see a move up toward this 38.2% retracement level, which is also where the 100 and the 200 bar moving average as represented by the blue line and the green line right here. That would be our target on the upside. But until that time when the market can break above that, the bias remains to the downside for this currency pair with the potential to move back down toward our low at 125.62. If we remember that the low, going back to the daily chart, the low for all of last year came in at the 124.54 level. That would still be a target level for us from in the more longer term. In addition, we have this channel trend line here for the euro dollar, which currently comes in at 124.97. Now let's take a look at the sterling versus U.S. dollar. We had better or worse than expected trade data coming out of that country today, and that forced the market back through this blue line through the 100-hour moving average. That 100-hour moving average comes in at 148.52. Market went through that level and off down to the 50% retracement of the move up from the lows that we saw here last week to the highs that we saw last week as well. We had a double top there yesterday at around the 150.47 level that gave, and look, notice how it came right up to the 200-hour moving average there. So we found good sellers against this old high against the 200-hour moving average. Market then started to move back down toward the 100-hour moving average. Had a little move to the upside in early Tokyo Far East trading, but when that economic data came out, moved back below the 100-hour moving average. Taking a look at the 5-minute chart in the sterling versus U.S. dollar. Right now we are in a consolidation phase here with the high at 147.87 and a low at 147.44, kind of defining the range here. If we're able to break above this ceiling here, we should head toward the 38.2% retracement at 148.10. On the downside, we break through the 147.44 level. We should see lower levels for the sterling versus U.S. dollar, and we'd have to go back to the daily chart to see that we do have this is the low on this day came in at 147.11. That would be the next target level on the downside. So once again, we break through the 147.44 level. We should be heading down toward 147.11 area where we had these lows here for the pound sterling. Note that we have not had a close below this current level here. All these bars that have gone lower, we've had closes above this level. So if we do close below or at these levels, it would be the lowest close for the pound sterling in well well, since going back to this period right here in 2009. So that is somewhat of significance, so we'll pay attention to that. Let's take a look at the dollar versus Swiss franc, and that currency pair. We were using the 100 bar moving average sort of as a support level here, especially for most of the trading day here today. You can see how we had a couple bars that tried to dip below that line, that blue line, but each of the time the market rejected it all through this period here. The market held that blue line, tested the bottom, could not move that below, and then started to move back up to the upside. Now from a 5-minute chart, we have moved back down toward the 50% retracement of the day's trading range, but are finding support against that level and started to move back to the upside here. We do have the 100 bar moving average down below, but right now it looks like we'll be paying attention to this 50% retracement line as our key support level for the dollar versus Swiss. Let's go to the dollar yen. The dollar yen on an hourly chart is trading what I call in between the goalposts and certainly trying to test the bottom end of the goalpost. The goalpost is defined by the blue line, that's our 100-hour moving average, and the green line, our 200-hour moving average. We've had a few little moves to the upside and the downside, but each of the time that seems to be rejected. Currently, the 100-hour moving average is at 92.80. If we break below that level, we should see lower levels, or we should see, and with momentum, we should see a move back down toward 92.28. If we break above the green line, we should see further moves up toward this old floor area and resistance level, floor and ceiling area around the 93.85 level. But until that time, look for buyers against the blue line with a move toward the green line, and sellers against the green line with a move toward the blue line. And we're looking for a break in either direction, one way or the other. The dollar versus Canada continues to kind of wander to the downside here in a fairly flat downward bias. The key support off of in the dollar Canada does come at the par 60 level. I'm going to go to the daily chart here. You go back to March 19th. That was the original low at par 60, moved sharply up, and then we had a lot of different lows where this became a nice ceiling level here. A couple times when the market tried to move above that level, but each of the time the market came back down below the level. So the par 60 level, you can see it very clearly in the hourly chart how the par 60 level is a real key level for this currency pair. So on the downside, that would be a target. We have also this channel support line at par 75. We have the top side at 101.80ish type area. So those currently trading at 101.50. We're kind of in between those two ranges on a 5-minute chart. If you want to be a little bit more aggressive, taking a look at the bias this is showing, we are above the 100 bar moving average in the 5-minute chart at 101.39, but we are below the 200 bar at 101.66. Trading at 101.49. We're kind of in between these two ranges here. Be a patient buyer against the blue line if you have a bias to the upside, and look for the break of the 200 bar moving average on the top side to lead to higher levels in the dollar versus Canada. Alternatively, if you're looking to sell the market, try to sell it against a 200 bar moving average at that level, and see if the market can give you confirmation back through the blue line, in which case you should see lower levels in that currency pair. But this would be the key. These are the key levels to watch. Again, the 100 bar moving averages are simple moving averages, and the 200 bar moving average on the 5-minute chart. Look for them to give you your clues for the trading here today. We do, this is Greg Michalowski from FXDD with the morning commentary for FX Street. Good luck with your trading. We'll speak to you again later on today.